What's going on, investing family? I'm Stock Market Jay, and we talking about the types of investors today. All right, guys. So, as you know, there are two different types of investors in the stock market. There are retail investors, and then there are going to be institutional investors. I did a video on institutional investors. I encourage you to go check it out. The retail investor, on the other hand, or the individual investor, a retail or individual investor is someone who invests in securities and assets on their own. Okay, usually in smaller quantities. This essentially means that you're not investing a company's money, right? So institutional investors are hedge funds, insurance companies, mutual funds, things like that. These are actual companies who allow uh, someone, an individual that works for them, to control their money and invest on their behalf to get their clients a return. Individual or retail investors are investing their own money into their own portfolios, right? They typically will buy stock in around the numbers such as 25, 50, 75, or 100, meaning the quantity of stocks that they own. They're trying to say that retail investors aren't buying millions of shares, hundreds of thousands of shares essentially. The stocks they buy are part of their portfolio and do not represent those of any organization. Like I said, institutional investors are investing on behalf of the organization in which they work for. They're essentially an asset for the organization. They get to go to their job, they'll work for the fund or the firm that they work for. The organization leverages their knowledge and their acumen in order to make them money, make the company money. In turn, the company gives the investors funds to control, to invest on their behalf for the client, for the company, and things like that. Here's the thing: as a retail investor, you have the best seat in the house. Retail investors have the ability, because I think about it, institutional investors, they're in the offices, they're up on their perch, they're just analyzing businesses, trying to see the inner workings of what's going on, using some economic data to try to pull profits, as much profits as they can. As a retail investor, we're in the stores, we're consuming the products and the services, we're on the ground floor. We get a chance to really see how these products and services work, see what the person high up on that perch doesn't get a chance to see. We understand how the markets are moving because we're looking at it from a standpoint of, this is my money, right? This is my money. I want my money to move for me in a manner in which it optimally impacts my financial standings, my financial status, right? So you're gonna move with your best interests at heart. Here's the thing: you have to have the investor acumen. You have to have an investor mindset. You have to know how to properly invest in order to properly pull those profits out of the market. If you don't, you will lose money. You will lose your hard-earned money. You will likely think the markets are rigged, the markets a scam, and this is because you haven't learned how to play the game. Don't jump in speculating. Don't jump in gambling with your own hard-earned money. Learn how to play the game. Learn how to do fundamental research. Learn how to do fundamental analysis or technical analysis, depending on how your learning style is. Learn how to build stories around these companies. Learn when to enter and exit the market. And sometimes you do absolutely nothing in the market. You just be patient and you just wait. Learn how to play the game if you want to win, investing family. All right, now, peace.